Studio. Google employees to protest today over job losses and what Unite calls union busting. Sir Richard Branson's satellite launching firm Virgin Orbit files for bankruptcy protection and puts itself up for sale. Stuck in a 40-year time warp, the chairman of Marks & Spencer calls for changes to company law.
I've actually brought with me 10. These are only 10 annual reports. I don't know whether you can see them. These are all big company annual reports. I can hardly lift it. Lovingly produced and full, I have to tell you, of very important information that practically nobody's ever read.
Plus tributes to Nigel Lawson, the architect of 1980s economic reforms who's died at the age of 91. Good morning, this is Ian King Live, an hour of business and economic news from the heart of the city. Well, later this morning, employees of Google will be staging a demonstration outside the tech giant's UK headquarters at London's King's Cross. It comes amid what the Unite union has described as union busting. Google announced in January it was planning to make redundant some 10,000 employees around the world, hundreds of whom are thought to be based here in the UK. Well, joining me now is Matt Whaley. He's a regional officer at Unite, the union. Matt, morning to you. How many members do you have in King's Cross?
Well, we have over 1,000 members now. It's steadily grown since the redundancy programme was announced back in January.
And do you enjoy recognition from Google?
We don't at this stage. It is an aspiration. It's something a lot of our members now feel is necessary, in part because they think Google has lost a lot of its values in terms of how it treats its employees.
So talk to me about the consultation process. Obviously, Google announced this big redundancy process earlier in the year. What's it been like?
OK, well, I mean, the redundancy announcement came out worldwide. It's not just the UK that's affected by the job cuts. We saw a lot of people approaching the union for support, concerned about their jobs, concerned about how the process would be handled. And, you know, we've tried to engage with it. We've tried to ensure that the employee reps were trained properly, because when a union isn't recognised, you elect representatives to do a consultation. We've given them support, we've given them training. They've been a very good bunch, actually. They've made good counter-proposals to Google, tried to improve the process. But unfortunately, we don't think Google's really bought into this consultation. It's been seen more of an inconvenience rather than a requirement that you have to do. And something that can actually benefit the staff and benefit the company to make sure you're not making mistakes with the process.
Yes, in your statement, you actually use the term union busting. I mean, is Google not cooperating with union reps or allowing them to sit in meetings with affected employees?
They're not, and it's quite sad, really, because I've dealt with Google for a number of years now. I've been into this building behind us. I've represented members who've had quite serious issues. And, you know, relations have been cordial, they've been professional. But, you know, since the union's grown in size, they've shut the reps out of the redundancy meetings. We've got a lot of staff who are quite stressed. There are still problems with the redundancy process that have carried over from the collective consultation, because questions haven't really been answered around how employees have been grouped or pooled. And there's been some questions about the selection criteria. Now, we did warn Google. I wrote quite politely to Google asking them to engage with the trade unions so we could try to sort this out and try to ensure the process was fair. And both times I got told, you know, you're not recognised, we're not talking to you. And, you know, the result of that is people have now raised grievances. And Google is refusing to hear those grievances on the basis of the ACAS code. Now, the ACAS code isn't what governs an employee's right to raise a grievance in its entirety. If there are problems with a redundancy process, the employer is supposed to address them. And if you raise a grievance, you are supposed to be permitted to have a union representative accompany you, which the company are refusing to allow reps to basically go in on the meetings. I've even had situations where I've had members crying to me in meetings in meetings I've had with them, where the employer is demanding doctor certificates to make reasonable adjustments. Now, they say, Google, that they'll consider allowing you a companion in these meetings if it's for a disability reason, you know, which employers should make adjustments for disabilities. But demanding doctor's notes the law doesn't actually require that. It's quite shocking. A lot of people say that it's not in line with Google's values. You know, Google used to say years ago, don't be evil. And, we consider the way they're treating people in this redundancy process to be quite evil. And, that's why employees have taken the decision to protest today.
OK, and briefly, if you would, please, Matt, obviously Google is far from being alone among the tech giants in laying people off. Are you building memberships in other big employers right now, the likes of Meta and Amazon?
We are seeing growth, yes. For a long time, the unions were trying to grow in the tech industry, and we are seeing some green shoots of growth now, because I think people are realising, tech companies, a lot of them have high values about how they treat staff, but you're seeing yourself, you're seeing Meta, you're seeing Twitter, the way Twitter have treated their employees. People need an independent voice at work, and they need some independent support that they can access, and you can only really get that from a trade union.
All right, Matt Whaley, appreciate you joining me today. Thank you.
No problem.
Now, company law is stuck in a 40-year time warp. So says Archie Norman, the chairman of Marks & Spencer, who in an open letter to the business secretary, Kemi Badenoch, argues that ordinary people who've invested in the UK's listed businesses struggle to hear from and communicate with them. He argues the situation could be changed by a handful of straightforward amendments to the Companies Act.
You can call me an old romantic if you like, but I still think that there's a case for a share-owning democracy. One where individuals feel they've got a stake in our big public companies. And at a time when trust in big business is on the wane, it's all the more important that we, like companies like Marks & Spencer, are able to talk to our individual shareholders directly. And I think the difficulty today is that the law actually perversely prevents us from doing so. So we need to modernise the way in which we talk to and communicate with individual shareholders so that we can contact them directly and so that we can encourage people to have a relationship with the companies they're invested in.
Now, the heart of all this is the nominee account, whereby a broker will hold a security on behalf of their clients. You think that is getting in the way of the relationship between the company and its individual shareholders?
Yes, so what's happened over the years, and this is over 30 or 40 years, and remember, the Companies Act, the company law, was really set in the 1980s, revised in 2006. But what's happened in the last 20 years is the way in which people hold shares is through nominee accounts, through what they call platforms, people like Hargreaves Lansdown. And so those platforms hold the shares on behalf of the individual in what they call a nominee account. We at M&S can't see who the people are behind that nominee account, so we don't get to communicate with them at all. So whereas in the past people would buy a share and we'd know is Mrs. Smith down in Clapham, and we'd write to her and could talk to her directly. Now we can't even see. And if this goes on this way at the current rate, in 30 years' time, M&S will not have a single individual shareholder we can talk to.
We're just going to break into our interview with Archie Norman, the chairman of Marks & Spencer. Don't worry, we will be bringing you that interview in full later on in the programme. But we're just going to hear some words from the NATO Secretary-General Jens Stoltenberg. Obviously, Finland has been admitted to NATO today.
Allies meet at the summit in Vilnius later on. Allies will agree to have a more ambitious defence investment pledge, where we regard 2% of GDP for defence, not as a ceiling, but as a floor, a minimum that we need to spend in a more dangerous world on our security. And then we will also meet with our Asia-Pacific partners, New Zealand, Australia, Japan and South Korea. Security is not regional, security is global. What happens in Europe matters for the Indo-Pacific, for Asia. And what happens in Asia matters for Europe. And the war in Ukraine really demonstrates that with all its global ramifications. And also when we see that China and Russia are coming more and more closely, that they stand together, work together, it makes it even more obvious that we need to stand together with our partners in the Indo-Pacific. And with that, I'm ready to take your questions.
Ready to bolster its presence around Finland. If NATO decides it's going to do something to send in more troops, is this something that NATO's considering? What can we expect in coming weeks and perhaps months in terms of exercises and other things that might be seen as potentially a provocation?
So first of all, what we have seen over many years is Russian military buildup, also in the north, close to Finland, to Norway. And this has taken place over many years in the Kola Peninsula, in the Arctic. And we have not only seen a Russian military buildup, but we've also seen that Russia is willing, and President Putin is willing to use military force against neighbors. Georgia in 2008, then Crimea in 2014, and then the full-fledged invasion of Ukraine last year. So this is part of a pattern, and that's exactly why we have strengthened NATO, our readiness, our presence in the eastern part of the alliance, and why NATO allies are investing more also in new modern capabilities. And it was actually the invasion of Ukraine last year that led to the decision by Finland and Sweden to apply for a NATO membership. And it just demonstrates that when President Putin had as a declared goal of the invasion of Ukraine to get less NATO. He wanted less NATO along his borders. He wanted to close NATO's door, no more NATO membership for any more countries in Europe. He's getting exactly the opposite. He's getting more troops, more readiness, more forces, land, sea and air in the eastern part of the alliance, and he's getting more members, Sweden today, and soon also Finland today, and soon also Sweden will become a full-fledged member of the alliance. Then we are constantly assessing our posture, our presence. We have more exercises, we have more presence also in the Nordic area, but again, this is something which is part of a pattern that NATO has already responded to.
Mr. Stoltenberg, what does this mean personally to you? Is this sort of an emotional highlight for your term? And secondly, can you really celebrate when Sweden is not ready to join yet?
So I'm glad and I'm proud to be the Secretary General that can welcome Finland as a full-fledged member of the alliance. This is important for NATO, it's important for Finland, it's important not least for the Nordic region and the Baltic region. You can just look at the map and understand how important Finland is for the security in the Nordic and the Baltic region. And then also, of course, Finland brings high-end capabilities, substantial forces, and also the advanced defense industry into the alliance. But personally, I'm also glad because I'm from Norway. I've worked with Finland and Finnish politicians and leaders for many, many years. And of course, not so many years ago, we thought it was unthinkable that Finland would become a member. Now they are a full-fledged member of our alliance. And that is truly historic and something that demonstrates that Finland is a sovereign, independent country. They make their own decisions. And NATO is an alliance of democracies with an open door to democratic sovereign nations as Finland.
Will the security guarantees of NATO now apply 100% to Finland, and what will the difference between Finland and Sweden be in this regard?
Well, what happens today is that Finland becomes a full-fledged member of the alliance, and that means, of course, that they will now participate fully as a member in all NATO meetings, activities, military structures, command structure, and all parts of NATO civilian and military structures. But of course, most importantly, is that by becoming a member, Finland will get an ironclad security guarantee. Article 5, our collective defense clause, one for all for one, will now from today apply for Finland. Then of course this is something that builds on what has happened over the last year. Because when NATO allies, when the heads of state and government at the summit in Madrid in June last year decided to invite Finland and Sweden, then both Finland and Sweden came in a much stronger and much better position towards NATO than before. So also Sweden, which is not yet a full-fledged member, is in a very closer and much better position As an invitee, they participate in NATO meetings. They are integrating into NATO structures. We are developing capability targets, taking account for also Sweden when we do defense planning. So Sweden is also very close to NATO, but of course they haven't that final ratification by all allies, and therefore not a full-fledged member. Let me also add on Sweden, and you actually also had a question about Sweden, is that, of course, it is a great day to have Finland as a member, but we will ensure that also Sweden will become a full member. And we have to remember that all allies agreed to invite them, and all allies have signed the accession protocol. What remains when it comes to Sweden is the ratification in 2 parliaments. I'm confident that will happen. I met with President Erdogan some weeks ago. I also spoke with him on the phone recently, and we agreed, of course, first of all, to ensure that Finland becomes a full member, that the accession process is now finalized for Finland. But we also agreed to restart the process, the meetings of the permanent mechanism, the meetings of Finland, Sweden, and Turkey, to ensure also that we can make progress on the ratification of Sweden. So Sweden is in a much better place now than before they applied, and we will continue to work hard to ensure that we can finalize the ratification process also for Sweden.
Question to follow up on the question before. In most of the countries on the eastern flank, there are also troops from other countries. Will there be troops from other countries also in Finland? And the second question, how can NATO be more safe by having a much longer border with Russia?
It is Finnish decision whether they would like to have any. There will be no NATO troops in Finland without the consent of Finland. And of course, what we have in many countries is that we have exercises. We have naval and air presence and so on, but we don't have permanent bases. And this has not been an issue so far in our discussions with Finland. Then there also
Longer border.
Well, the reality is that this is a result of President Putin's war aggression against Ukraine. And of course, Finland also has a history that tells them about the brutality that a war can afflict on the country, like they now see in Ukraine, and like Finland saw during the Winter War in 1939-1940. And therefore, when they saw that President Putin didn't not only threaten Ukraine, but actually threatened every nation in Europe that wanted to make their own decisions on joining NATO or not, then Finland decided to join the alliance.
We will keep abreast of those comments from Jens Stoltenberg, the NATO Secretary-General, and bring those to you if there's anything of import that is said there. In the meantime, now we're going to return to our interview with the Marks & Spencer Chairman, Archie Norman, who's campaigning for an improvement to shareholder democracy. Before we cut out of the interview there, I was asking him whether he thought the problems with nominee accounts could be restored by establishing a link between companies and shareholders via the registrar. Here's what he told me.
We think so. The sensible thing is to have an industry platform or piece of technology, which simply means that all the nominee accounts, when you register as a nominee account, you register an email address, which unless you opt out, companies can communicate to you on, and they can send you annual report or notices of meetings or just an update as to what's going on in the company.
Now, you also want digital communications to be enhanced between companies and shareholders. What sort of things do you have in mind here?
Well, at the moment, by law, again, it's because the law predates the digital era, almost all the communications we send out are paper-based. So a notice of a meeting is paper-based, the annual report is paper-based, and the AGM is still, by law, meant to be held physically, so in a place. So these old town hall style AGMs are still mandated in law. What we're saying is, look, let's open it up, make companies accessible to far more people by digitizing the communications so we can email. If they really want to see the annual report, that should be posted online. They can see it online. We shouldn't have to send it to them. We can email notice of meetings. We can email opportunities to do a webcast with the chairman or chief executive. We can open up all these things. I mean, at M&S, we find that we have what we call a small shareholder panel. So we do invite our retail shareholders in. And we have a panel that rotates every year. And they come in to meet with myself or the chief executive, Stuart Machin. And they love it. And there's a huge list of people who want to join the panel. So there's lots of appetite for this stuff. It's just we've made it very difficult for people.
What is the cost to Marks & Spencer of producing an annual report and mailing it out?
Well, it's not just what people think. It's not just producing it. I mean, we employ a design firm to design the cover. And you may or may not think it's any good, but and then I draft a letter, the chief executive drafts a letter, there's a lot of management time goes into this, a huge amount of audit time. So in total, this is costing hundreds of thousands of pounds. I mean, at a minimum, most FTSE 100 type companies would probably spend $250,000, maybe $500,000. Every time we mail out to shareholders, that's over £100,000. No, sent in pigeon post. And the annual reports now become, of course, colossal documents.
I think you've got one there. Do you want to hold that up so the viewers can see the size of it?
I want to show you, Jules, I've actually brought with me 10. These is only 10 annual reports. I don't know whether you can see them. These are all big company annual reports. I can hardly lift it. And I'll show you this is the M&S one from last year. We're just producing another one now. It's 220 pages long. Lovingly produced and full, I have to tell you, of very important information that practically nobody's ever read. And we have to, now my point is not that we shouldn't produce it, it's all well intended, but the reporting requirements on companies have grown astronomically. So these are 48% longer on average than they were 5 years ago, and more than double what they were 10 years ago. So my point is this, is very few people read these. They're really only interesting for investment analysts. They shouldn't be mailed out to lots of people. In this day and age, they should be posted online, as they are, and people who want to access them can review them online. Because this is costing a lot of money. It's totally unsustainable. I mean, forests of the world have been demolished to produce annual reports. And it's very expensive to do and takes a lot of company time. And it's fundamentally, they're not suitable communications for individual shareholders. There should be a different form of communication to say to Mrs. Smith in Clapham, this is the company invested and this is how it's doing.
Now, you also want to replace physical meetings on occasions with digital annual general meetings. Won't that come at a cost to society? I mean, isn't it vital for shareholder democracy that individual shareholders can come along and look directors in the eye? Well,
of course, companies and boards need to be held accountable. This is what this is our whole argument, is we do need to make boards more accountable and more visibly accountable and accessible to their shareholders. But this idea that an old-fashioned town hall meeting where people turn up, take the day off, trek down to London and turn up to a sort of stadium and interrogate the board is just ridiculous. I mean, 30, 40 years ago, yes. I mean, I remember going to the Asda AGM in Pudsey Civic Hall in Leeds, and there were 800 angry shareholders. The share price, when I arrived, had declined a long way. And that was a testy, feisty meeting and served a purpose. But that doesn't happen anymore. You know, most shareholders live in different parts of the country. Long gone are the days when people will take a day off. You know, if they're in work, if they've got kids to look after, simply can't attend these AGMs. So the people who do attend tend to be people who are typically retired, who've got the time available. And sometimes, we love them all, and there's some terrific people who do turn up. But sometimes there are quite a lot of people, too, who like the sound of their own voices rather too much. And that doesn't make for a great meeting. Remember that in a town hall AGM, typically you get through 8 to 10 questions. It's not really a test of the board. So what we're saying is, look, at the moment by law you have to have a physical meeting. Turn it into a digital meeting. Open it up to the world. No, there are shareholders around the world in Marks & Spencer who would like to attend. Enable them to attend. Enable people in Newcastle and Edinburgh and Leeds to attend, to take half an hour off work to have a look into the AGM, or time out of their day without having to travel to London. And if you do that, we can show you that you get a much, much better result. So prior to the AGM, we held the M&S, prior to the pandemic, we held the M&S AGM in Wembley Stadium, not in the stadium itself, I have to say, but in a large room there. And we had about 500 odd, wonderful people who turn up. Quite a few of them pensioners and people who, M&S pensioners, former employees, and it was nice to see them all. But of course, most of our shareholders couldn't possibly come. During the pandemic, we had to switch to digital, and there was an exemption provided by the government to do so. And we've carried on with a primarily digital AGM. And last year we got 1,700 attending, 3 times as many. And then you get a lot more people after the AGM say, well, I couldn't attend on the day, but I'll have a watch a week later or a week after. So it sits on the record. And by the way, just in case you think it was all a big fix and we were trying to avoid scrutiny, we invited Anita Anand to come. We invite some celebrity like yourself here to come and hold the board to account, and they're the voice of the show. So they choose the questions. We don't choose the questions.
Very good.
And we take live questions. So, this is how things are done nowadays. And all we're saying is, look, if people really want to hold a physical AGM, fine. We're not very convinced by that because often, I've sat in AGMs where there's only 2 or 3 shareholders in. Sometimes they're held in locations which are, I have to say, quite difficult to get to.
Yes.
And you just wonder what's going on. We think there should be a new framework. You should be encouraged to have a digital AGM. You should have encouraged to get a big attendance. Because this is your chance for people genuinely to feel they've got some contact with the board. And it works very, very well.
Well, I can empathise with a lot of what Archie Norman was saying in that interview. There was one chairman who famously used to hold his annual meetings on Christmas Eve so he didn't have to face the shareholders. Well, Archie Norman said a lot more to me, and we'll be playing out the rest of that interview on this programme this time tomorrow. You don't want to miss it. In the meantime, we've got a bit more breaking news to bring you. We're going to bring you an update now on the news that the professional boxer and Olympic medalist Amir Khan has been banned from all sport for 2 years after testing positive for a prohibited substance. He's been speaking in the last few minutes to Sky's Matthew Thompson.
I've just heard about it now as well, so I've got no comment at the moment, but I'll be in touch. I'll give you my verdict.
Does it mean that is it essentially a recognition that you cheated in the fight?
Never. I've never cheated. I'm a retired fighter, and at the same time, you can see by my performance. My performance against Kell Brook wasn't the best performance I had.
So in the sense that you lost the fight?
I lost the fight, and obviously if I went in there and knocked Kell Brook out, it's different. I've never cheated in my life. I'm the one who wanted the testing on the fight, and also the amount that it was. I mean, the amount that was in my system could have been by shaking people's hands, and it was.
So how does a bodybuilding drug get into your system? That is the question, isn't it?
I don't know what drug was in my system.
Ostarine.
So, and at the same time,
not licensed for human consumption.
Guys, I'm really sorry. We need to prepare a statement. We'll be
I'll be in touch. I'm gonna give my views anyway. But like I said, I've never cheated in my life. I will never cheat. And like I said, I am a retired fighter, so I've got a 2-year ban now, which is quite strange and funny that they've banned me. I'm already retired anyway.
So no comeback plans then, clearly?
No comeback plans at all. But like I said, I've never cheated and I never will.
That was Amir Khan speaking exclusively to Sky News. I suspect he's got a great deal more to say, judging from his comments there, and we will, of course, bring you those comments when we get them. Now, almost half of the UK population is currently not in a positive state of mental well-being. That is the finding of a survey carried out for the insurance giant Accesso, involving 30,000 people aged 18 to 74 from 16 countries across Europe, Asia and the Americas. It found that some 21% of UK adults are in what the study describes as emotional distress. Well, the estimated cost of this in terms of working days lost as a result is put at £28 billion. Well, joining me now live from Switzerland is Claudio Giannal. He's the Chief Executive of AXA UK and Ireland. Claudio, very good morning to you. What was your motivation for carrying out this study?
Morning, Ian, and thanks for having me here. So it's the third year we do this, and the idea behind this is twofold. One is to make mind health a theme that can be talked about. So only when we accept that we have this in our society, probably we can do something about it. And secondly, also showing what an impact it has on the economy, and also what an important role employers can have in helping the employees to be in a good place mentally when they come to work.
Why do you think the UK fared so comparatively badly compared with its peers?
Well, first, on the good side, we had a better year than last year in the UK. We slightly have less people struggling than what we've seen last year, and more people flourishing. Now, compared to the rest of the countries we look at, there is a piece which is positive, where people feel that there's less stigma around mental health in the UK, so people are more open to talk about it. And secondly, I do think we had 2 tough years in the UK, and that shows in the numbers we have seen.
Are businesses getting to grips with this issue and supporting their employees more?
Well, I think what the numbers show is quite dramatic. Where employees get support at the workplace, they are twice as likely to be happy, or 3.5 times more likely to flourish. And the difference that you can make as an employer is by having a culture of trust, respect, and kindness, where people feel safe about being themselves, and everyone is struggling, and being able to say that work is key to have a good mental health condition. And the second part is having tools, apps. So, for example, we have first mind health supporters to detect people who are distressed, to help them. And if you do this, I think there's a big play that employees can have. And it's not just the employee himself or herself that feel better. They will be better with their families, in society in general. So it's helpful for everyone.
Now, obviously, you write health insurance. Do you see many people, increasing numbers of people, taking up the mental health options?
So we have seen an increase in terms of people asking for help when it comes to mental health. Yes, we have seen that across the customer base too. And I think one of the things the studies also show is that women are more struggling than men, and especially young ones. I think that's the number that did strike me most, that 48% of all the people between 18 and 24 we asked say they have a mental health condition, which is 1 in 2.
That is very interesting. Why do you think those particular groups appear more vulnerable?
Well, I think if you look at the young ones, it's quite well documented that many of them have an addiction to tech, to social networks. So my read is they don't spend enough time in the here and now, accepting that life sometimes is difficult, spending time with real friends, real family. So when they struggle, that they have people who can support them. And I think in there lies of the solution. It's not something we can't address. Everyone has in him or herself the force and what it needs to look after yourself. But we need to take ourselves seriously when it comes to mental health, work on it, and spend time with ourselves to make sure we are in a good state, as we do physically.
And briefly, if you would please, Claudio, what sort of things are you doing within AXA to support employees who come to you when they say they have this sort of condition?
So we do have what we call first aiders when it comes to mental health, people who detect people who are distressed. That's a big piece so that we can act when it happens. But the most important thing I believe we do at AXA UK and Ireland is having a culture that is built on trust, respect and kindness, which gives this fundament in the organization that people can be themselves at work and feel psychologically safe. And that's the biggest contribution I think we can make as a company, to make sure people have the right environment when they come to work. And then secondly is having tools that they can use. Yeah.
All right, Claudio, appreciate you joining me today, and thank you for being so patient and waiting for us. Good to see you this morning.
No problem. Thanks, Ian. Thanks for having me.
Still to come here on Ian King Live, we're going to have a look at how the markets are doing this Tuesday morning. Don't go away. Welcome, Matt. Let me tell you about some of the other business news stories around this morning. And Sir Richard Branson's satellite launching firm Virgin Orbit has filed for bankruptcy protection and put itself up for sale. Well, the news comes just days after the company said it was laying off around 85% of its 750 or so employees. Well, the future of Virgin Orbit has been in doubt since a failed attempt in January to launch satellites from Cornwall with its flagship Launcher 1 rocket. The rocket, which is the first to be launched from Britain, failed to make it into orbit, and its payload of US and UK intelligence satellites ended up in the ocean. The cosmetics giant L'Oreal is buying the Australian luxury cosmetics group Aesop for $2.5 billion. It's the biggest deal done by the French company in many years and the third largest deal involving an Australian company in the consumer goods sector. Well, Aesop, which specialises in skin, hair and body care products, was founded in 1987 and was bought outright by the Brazilian company Natura, whose other assets include Avon and The Body Shop, in 2016. And the wealth managers Rathbones Group is merging with Investec Wealth and Investment. The deal will create what the pair say will be the UK's leading discretionary wealth manager, with approximately £100 billion worth of funds under management and administration. Well, under the terms of the deal, which values Investec Wealth and Investment at £839 million, Rathbones is issuing new shares in itself to the division's parent company, Investec. The latter will then own 41.25% of the enlarged Rathbones. Well, the oil price has consolidated the gains it enjoyed yesterday following the surprise production cut announced by the OPEC Plus grouping on Sunday evening. A barrel of Brent crude will currently cost you $85.23 a barrel. That's up a little over a third of 1%. On the equity markets, there was mixed trading in the Asia-Pacific region overnight. There were gains in Tokyo, Shanghai, Mumbai and in Sydney, but Hong Kong finished off 2/3 of 1%. Well, in Europe, markets have continued the bright start they made to the second quarter. There you are. You can see all of the main continental European indices in positive territory right now. L'Oreal, which I mentioned a moment or so ago, its shares are up 2/3 of 1% in Paris on news of that acquisition. Well, here in London, the FTSE 100 is also in positive territory, currently some 8 points to the good. It's currently ahead right now for a 7th consecutive session, and that is led largely by the mining and financial stocks. The leading blue chip gainer this morning is International Airlines Group, the owner, of course, of British Airways and Aer Lingus, up 1.75% on the back of some broker comment. Well, look at that. It's actually been overtaken for the FTSE yellow leader jersey now by Glencore, the miner, up by just over 2.25%. That is after it saw a $23 billion offer that it made on Monday for the Canadian miner Teck Resources get knocked back. Outside the FTSE 100, Rathbones, which I mentioned a moment or so ago, currently up by some 2% on its acquisition of Investec's wealth and investment arm. Investec itself, meanwhile, up by 3.75%. On the foreign exchange market, well, the pound earlier this morning hit its highest level against the US dollar since June last year. It's currently up some 0.75% against the greenback, also 0.5% higher against the euro. The single currency, meanwhile, is up 1/3 of 1% right now against the dollar. Joining me this morning is Michael Metcalfe. He's head of macro strategy at State Street. Michael, good to see you this morning. Let's start with FX because there's a lot going on. I mean, let's go to the other side of the world first of all. The Reserve Bank of Australia didn't raise interest rates overnight, which obviously hit the Aussie dollar, but a very interesting announcement.
I mean, it was. And look, obviously we're looking right now for guidance from the central banks because markets have been trying to figure out where the peak in interest rates are in all countries, to be frank. And the fact that the RBA kept rates on hold might suggest that we've finally reached a peak in Australia already. Yeah, and of course the Aussies have raised interest rates. I mean, they moved more slowly than the Bank of England did, but when they did get going, they really did. And house prices have come off a cliff almost, haven't they? Yeah, and there's a group of economies where obviously we need to watch the housing market very closely. Australia is one, UK obviously is one, and Sweden is another. And I think, it's just a sign that higher rates are doing their job and slowing the economy, and that might mean that rates don't need to go up anymore. What about this strength in sterling? Now, it looks as though there's a bit of dollar weakness attached to it, but nonetheless, the pound is broadly ahead across a range of currencies today. Is this the market starting to think that after the inflation numbers last week, the bank may have to go again? Yeah, well, look, it's really interesting that sterling is reacting positively to things like expectations of higher rates and higher inflation, because I think certainly 3 or 4 months ago, sterling was suffering from a bit of a credibility problem. There was questions about credibility of policy. both on the monetary side and the fiscal side, I think. And I think that is now going away, and I think confidence to the pound is returning.
Now, looking at the equity markets, obviously Europe in the pink this morning, likewise London. I'm quite surprised by this, given this OPEC production cut that we've had. I mean, implicit in all that is higher inflation, not necessarily good news.
Look, obviously higher inflation would be really bad news right now because it would mean that we're not at the peak in rates. But it does seem to be that equity markets are showing a little bit of underlying resilience. You know, we got through all those shocks in the first quarter. Second quarter, we thought we'd done with the shocks, but obviously OPEC threw another one in there. So the fact that equities have continued to rally, even though oil prices have gone up, I think suggests underlying sentiment is pretty firm.
I mean, obviously the FTSE is heavy in oil stocks, but continental Europe perhaps less so. Is this really a reflection of the fact that the earnings season we've just gone through was better than expected?
Well, look, I mean, this is the thing. You know, at the start of the year, everyone was predicting recession and suggesting that earnings would come down. And actually, the macro data has suggested maybe the recession risks are a little bit lower. And as you say, earnings so far, so good. So, yeah.
And also this huge rally in tech stocks that we've seen in the US over the last quarter.
Well, I mean, it's interesting. All the shocks that we had in the first quarter, tech is still seen as something of a safe haven. I think the only risk there, obviously, is that we do need to get this idea that we've reached the peak in rates in the US for tech to continue to perform.
All right, Michael, we've got to leave it there, I'm afraid. Great to see you this morning. Thank you. As entertainment venues, visitor attractions and theme parks compete for business, offering a better service to customers is more important than ever, whether that's enabling them to buy food and drink more easily, get a parking pass in advance or joining a virtual queue. Well, AIM-listed Accesso technology provides software enabling uses for the leisure, entertainment and cultural sectors. This morning it reported a full-year pre-tax profit of $12.4 million for 2022. That was up 2.5% on 2021. Well, joining me now is Accesso's Chief Executive, Steve Brown. Steve, welcome to you. Thanks very much for joining me at such an unsociable hour, your time. Which are the applications most in demand right now from customers?
Well, we see demand across all our solutions, but online ticketing, mobile ticketing is clearly at a new level of demand as consumers look for self-service, venues look for utilizing less labor to sell tickets, but also demand for virtual queuing. People seem to have little patience for waiting in a queue these days. So both our premium queuing and our e-commerce products are leading the way.
Now, you're in 29 countries worldwide. I would assume, given the strength of its economy right now, that the US is the most exciting for you.
The US is exciting. What's interesting is that we're seeing demand across the leisure sector in all the geographies that we serve. People are looking to get out and have fun and, facilitate that in the easiest way possible, which is typically from their mobile phone on all fronts, whether they're ordering food and beverage or buying a ticket or finding a way to, avoid waiting in the queue. The U.S. is certainly doing very well, but we're seeing strength across all the regions where we operate.
Now, your career began at Disney, of course. Has the leisure and theme park industry been quick enough to adopt technology of this kind?
Actually, that's a very good point. I don't think so. I think the scale, the priority around, the attractions, the entertainment often consumes capital before technology does. But we're seeing a significant catch up in that over the past few years. Driven by consumer demand, people's desire to do things on their own, use their mobile device, but also on the operator side, the need to operate with less labor, but also to manage with less available labor. So the operators have this demand and the consumer have the demand, and the two worlds are sort of colliding in terms of, how the technology is prioritized in terms of capital spending and focus by the leadership of these different venues.
Now, the leisure industry has obviously gone through an enormous amount of upheaval in recent years with the pandemic. I just wonder how you're positioning yourself for the future.
Things are back to normal. I have to say, better than normal, to be honest. We're seeing demand at levels we didn't even see before the pandemic. So, we're really focused on just continuing to provide the technology options for these venues as they look to modernize their platforms and provide technology in new ways like mobile food and beverage ordering, which now has become commonplace in theme parks or even the local McDonald's, that you may walk into. It's self-service ordering, it's kiosk. The days of manual labor are passing, and it's all about mobile commerce going forward. And we are working very hard to make sure we can meet those demands.
Now, it's worth pointing out, I guess, you don't just have customers in the leisure sector. One of your other clients is the Irish Defence Forces. Tell me about that.
That's right. We have a product called Prism, which is a device we use in virtual queuing in locations where your mobile phone isn't as conducive, like a water park, where you want to leave that in a locker and go about and have fun. But during the pandemic, we did a pilot project with the Irish Defense Fund to allow them to provide some tracking and information for their military staff, because the device has great tracking capabilities for social distancing and the whereabouts relative to other people. So that's just an example of some of the innovation that happens outside of what you might expect from Accesso.
All right, Steve, we've got to leave it there, I'm afraid. Thanks very much indeed for joining me again. And as I say, it's such an unsociable hour. Appreciate it.
Thank you.
Now, the funding environment for startups has not been too healthy over the last 6 months, and we're certainly hearing a lot less about so-called unicorns. Those are privately held startup companies that have achieved a value of more than $1 billion. But that is exactly what the British data analytics company Quantexa has just achieved. The company, whose AI-powered software helps financial companies fight fraud and financial crime, has just raised $129 million in its Series E round. That values it at $1.8 billion and confirms its unicorn status. Well, joining me now is the Chief Executive of Quantexa, Vishal Maria. Vishal, very good to see you again. We last had you on the programme in October 2021. How have you traded since then?
Thank you for having me on today, Ian. From a business standpoint, we've doubled in all metrics. If that's around revenues, if that's around number of customers or clients we're servicing globally, but also the number of users. We've gone from about 7,000 to over 12,000 end users on our platform. So it's been an incredible journey and plenty more to do.
I mentioned financial services there. That is not the only egg you have in the basket, as it were.
No, absolutely, Ian. And so when I started Quantexa back in 2016, I still remind myself it's only been 7 years. The strategy was very much a multi-industry strategy, so to support banks, insurers, but also the public sector. We were delighted to be awarded the contract earlier this year by the Cabinet Office, but we're also working in telecommunications and other industries as well.
Yeah, this Cabinet Office contract is quite a big deal for you. What does that entail?
So if we imagine from a financial crime and a fraud perspective, there's a lot of data elements out there. And if that's around bank account information, if that's around application data, every fraudster leaves a footprint, and that footprint is in the data. So what we're doing for many of our clients is how do you stitch that data together to unify it and then apply the best of machine learning and AI on top of that consolidated view, on top of that unified view. That's what we call decision intelligence. And we're doing this for many of our clients today.
So tell me about the funding round. I mean, I gather you haven't got through all of the capital you raised at your last round. Were you actually looking to raise money right now?
So great question, Ian. So when we closed Series D, which again was summer of 21, which was led by Warburg Pincus, and during the process of the last sort of 12, 18 months, as part of our duties, we spend time with many investors. Some of those investors who gave me term sheets in 21, but also new parties. So every quarter we've been having conversations and, showing predictability, showing to the market that, I say we're going to do this by June, and we do it. I say we're going to do this by October, and we do it. It's been a great journey on that point. And so coming to the beginning of this year, we started getting a lot of inbound and a lot of investors looking at what we're saying, looking at the market we're servicing, and we started receiving inbound. So we then kicked off quite a robust process earlier this year, and I'm delighted to onboard GIC to my cap table. They've been an absolute pleasure through the journey, and I look forward to the journey with them.
And what is this going to enable you to do, this injection of capital?
Great, Ian. So one thing that's really important for Quantexa is when I started it was to build foundational tech here in the UK. That hasn't changed. And the operating plan I've put together for the next 3 to 5 years for Quantexa is not changed, which is going to see us to get to a path to profitability. So we're aiming to be profitable in 2025, which again, for a company of our age, growing at 80, 90% to get to profitability, it's a huge kudos to the market and a huge kudos to my clients. So that won't change. But what we now have is opportunity, even more opportunity. If that's organic, so looking at innovation in the platform we have built, verticalizing the platform even more, but also inorganic. So we successfully acquired our first business in February, and there's more opportunities ahead.
Good stuff. Vishal, it's nice to see you again in the studio. Thanks for joining me. Time for a look now at this morning's business pages, and the Financial Times leads its print edition with news that EY has been banned from taking on any new listed audit clients in Germany for 2 years over failures in its work for the collapsed payments company Wirecard. The FT is currently leading its digital editions, meanwhile, with news that the National Crime Agency has dropped 2 of 3 lines of inquiry against the sanctioned Russian billionaire Mikhail Friedman after his arrest in December. There is also extensive coverage of the life and career of the former Chancellor Lord Lawson. The FT quotes Lord Nick Macpherson, the former Treasury Permanent Secretary, as saying Lawson was one of the greatest chancellors of the 20th century. Well, Lord Lawson also appears on the front page of the Times. Its business pages, meanwhile, lead with yesterday's surge in oil prices on the back of a surprise OPEC production cut. Meanwhile, the Daily Telegraph, which also splashes with Lawson's death, leads its business pages with reports that bickering in Brussels is threatening to inflict queues and disruption on British holidaymakers for years to come by derailing the rollout of new technology that would speed up passport checks. So joining me this morning is Oliver Shah, Associate Editor at the Sunday Times. Ollie, good to see you this morning. Lord Lawson, I think, really is, without dispute, a giant of the late 20th century economic scene, isn't he?
He really is, and he's the cognoscenti's choice of Tory pin-up, isn't he? If Maggie Thatcher is the Conservative leader all Prime Ministers look back to, Nigel Lawson is the Chancellor. Tory Chancellors tend to hark back to, and Rishi Sunak famously had a picture of Lawson above his desk in the Treasury. He's the tax-cutting Chancellor everyone remembers for lowering the top rate to 40% in the late 80s.
He was indeed, but the key point, which I think Liz Truss and Kwasi Kwarteng forgot, was that you actually have to get the public finances in order before you start cutting taxes.
It's very true. The point Rishi Sunak made in his Mays lecture at City University a few years ago, you have to, as you say, earn the right to cut taxes by building up a strong economy. And people also forget, you know, he's remembered for that rah-rah budget where it was all sort of boom, 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 1988. But the Lawson boom then led to some of the inflation and economic pain of the early 90s, didn't it? So it was not an unbridled good thing.
Yeah, but the other thing that people often forget, he was a tax simplifier. I mean, he always said taxes work best when they're simple, low and fair. And if you look at what's happened to the tax code since, how complicated it's got, he had a point.
Yeah, you wonder what he would make of various windfall taxes right now at a time when we're trying to attract investment in renewables and energy and things like the convoluted raising of corporation tax with the addition of various incentives. It's not very Lawsonian, is it?
No, he did undergo a bit of a conversion in later years because, of course, he fell out with Mrs Thatcher famously over ERM membership, but he later became a Brexiteer.
Yeah, it's a funny combination, isn't it? I mean, he thought the ERM would stabilise inflation in the UK and stabilise sterling. Obviously, that was not exactly the outcome. But you're right, he had a late life swing to the right, didn't he? And was a vigorous campaigner for Brexit and claimed, I think, some responsibility for pushing Cameron into calling the referendum.
Yeah, and also famously, he endorsed Rishi Sunak during the original leadership contest when he was up against Liz Truss. Perhaps he knew a thing or two there.
Yeah, I think Rishi Sunak, idolising Lawson as he did, went and paid homage to Lawson in France. And he was clearly a very keen follower of Lawson's and did study his books pretty closely as per the whole thing around you can't sort of just cut taxes off the hoof, you have to get there, and that cost him the initial leadership, didn't it?
Yeah, it really did. I mean, it's just extraordinary stuff. I mean, if you think back to Lawson as well, I mean, he was also one of the real drivers of privatisation.
Yeah, I mean, he, along with Margaret Thatcher, were the two main intellectual powerhouses of that government, weren't they? And the Tell Sid campaigns around British Gas, BP, these kind of companies, he was a key driver of that.
Yeah, which is funny enough what I've been talking to Archie Norman about this morning. Do you think Archie's got a point here with this campaign to enhance shareholder democracy?
Yes and no. I think the idea of digital AGMs is good and well, but I think you still need the traditional AGM. There's something about the democracy, isn't there, of management teams being held to account physically, having to go somewhere once a year. And Archie chairing M&S, the quintessential prawn sandwich AGM purveyor, should know that. But I think his other point around nominee companies is very good.
All right, Ollie, good to see you this morning. Thank you.
Thanks, Ian.
That's it from me. I'm back at 10 o'clock tomorrow morning with more from Archie Norman. You don't want to miss it. In the meantime, do stay tuned after this short break. It's Kimberly Leonard. Thanks for joining me today. Cheerio.